We have a conversation with Stanbic, and we're looking into what it actually takes to keep enterprises going. And joining us for that conversation to then being able to ferry us along our way is Florence Wanja, who's the Regional Head, East Africa Business and Commercial Banking with Stanbic, and she's with us this morning. It says Florence Wanja, but we're going to call you Wanja.
Yes, actually, I prefer that.
You prefer Wanja?
Yes, I prefer Wanja.
Fantastic. Yeah. Wanja, good morning.
Good morning.
And welcome to the Situation Room this morning. Making our enterprises thrive. Earlier this morning, we said, you know what? If you're selling juice out of your fridge and you're going to formalize that, you're running an enterprise. Yes. If you're selling tomatoes because you've harvested them from your farm, in August, and you're trying to make something, or you're selling poultry, you're running an enterprise.
Yes.
Just because you don't have an office with, a calendar and a picture of the president on the wall doesn't mean that you're not running an enterprise. So to keep those going, that's the forms of conversation that we'll have this morning. So thank you for doing that with us. But even before we do that, Dennis wants to share today's proverb with you, and we're going to put you to work as though you don't have enough. And, we'd love to get your interpretation of it.
Okay.
So today we are in South Africa, Madikwe Game Reserve to be specific.
Yes.
And in this game reserve, there is a quote that is synonymous because they have lots of lions. But a lion has to eat. But a roaring lion kills no game. A roaring lion kills no game. How would you interpret that? What do you think people of Madikwe are saying?
I think what they're saying is that rolling is not enough. So the rolling lion needs to actually hunt to be able to kill game. So beyond what is on the surface, you really need to do the work. Yeah, that's my interpretation.
No, put well said. Well put.
Interesting.
Yeah.
Interesting.
Indeed.
Yeah.
All right. Well, so let's get into this morning. There are... we're looking at how we can get enterprises to thrive. But we also know that SMEs, small and medium enterprises, and family-owned businesses are important to Kenya's economy. When we look at the economies of nations that have developing,
Yes.
whether you like it or not, that conversation is going to be in here. We know that the economies are boosted by SMEs, that the world's economies thrive on the private sector.
Yes.
And how they've been able to build. They're all privately owned businesses that start with individuals like you and I. So if we look at that and look at that in the Kenyan space or even through to the African space, why are they then so important? SMEs, mid-size, why are they so important to the Kenyan economy?
Yeah. So SMEs are important to Kenya's economy, and actually not just Kenya or the developing world, including developed world. So you find that SMEs contribute close to 70 to 80% of any economy's GDP. They also create employment. About 90% of all new jobs created come from SMEs. So they are actually the backbone of any economy. And for any economy to thrive, you need to have these enterprises, and the enterprises need to be supported. Now, taking it back to Kenya, I think it's more important in Kenya because SMEs create opportunities for young people. As I said, they create employment. And in a country where we still need to, build big enterprises, you find that most of the jobs that are going to young people are really being created by the SMEs. And they also create a lot of, they basically supply into the larger corporates. You find that most of the manufacturing entities, if you're looking at, say, for instance, anybody who is, say, processing food, they may be actually getting their produce from those small SMEs. I'll give an example, in dairy as an example. A small farmer who is running an enterprise, as you rightfully put it, I have 2 cows. I actually get milk. This milk goes to a dairy processing entity. I am an SME, but that enterprise or that cooperative would not actually thrive if I wasn't actually supplying them with milk.
Right.
So it becomes very, very important, especially in a country like this where we are largely agricultural, and you find that most of the inputs for agricultural, entities actually come from these small enterprises.
So we look at small enterprises, like the example you've made of a dairy farmer,
Yes.
and how they supply milk to these cooperatives. And you look at, most of the time, this is family led. It is family owned,
Yeah.
And with this, you'd see there's a parent who's in here pushing that, and if they exit now, it is the next generation that takes this business up and continues to push it, which then speaks in terms of these family business and everybody being put inside to understand the mechanics of how this business works for continuity purposes. And one would look at how then do we ensure that this family has all the information they need so that the business is long term and not just here because Mzee is still around.
That's actually one of the biggest challenges we see with family-owned businesses. And maybe just for context, not all SMEs are family-owned businesses, and not all family-owned businesses are SMEs.
Right.
But there's an overlap. And maybe, Dennis, just to ask, how many SMEs family-owned businesses do you think go to the second generation, percentage-wise?
Let me say 10%.
A bit more. From first generation to second generation, we find that only 30% of enterprises actually transition to the second generation, meaning for every 10 enterprises, only 3 will successfully go to the next generation. The moment you go to the third generation, the ratio becomes less, 20%. The moment you go to the fourth generation, you're talking about 10%. And that's really what we as a bank are really looking to do in terms of just supporting family-owned businesses to ensure that they transition into the second, third, fourth generation. And the reason why this happens more often than not is very basic things. And the one thing I keep advising my customers, as a minimum, an enterprise needs to have a family constitution. And the family constitution is really a document, or let me say a structure, that gives a bit of a structure of many things that this enterprise needs to consider to be able to actually transition to the next generation. One is just in the family constitution, you define what your business is. Why do you exist? Why was this business established by Mzee? From there, you determine where you want this business to go to. How far do you want it to go? How far do you want it to grow? And then you also decide how the business will actually transition from Mzee to the next generation. So that's succession planning. So you have you clearly outlined the succession planning for that entity. You've clearly outlined employment policies. Who do you hire? Who do you not hire? You've outlined how you basically, fund that business. So where do you fund from your own resources? Do you go to banks to get capital? And that family constitution also defines how you resolve conflict. Because one of the biggest challenges that families face and why they don't transition into the next generation, sometimes it's conflict within the family. Sometimes it's that when the principal passes away or is no longer there's no clarity on who is supposed to take over that business and to run it. So that family constitution then gives a semblance of structure, and that is actually what will define whether that business will thrive or not.
Do you actually have conversations about if the folks who are left behind are actually interested in the thing in the first place? Because I often see that, this is just... it's very possible that you could have a patriarch or a matriarch running the business together. This is something they've decided.
Yes.
Then there's the assumption that their children want to do the same thing. So that could be something that comes in to stop a process or essentially over time kill the process, number one. Number two, they've not had a conversation about this interest at some point to say, okay, guys, is this something that you want to do? It's fed you, it's educated you, it's given you something to live off on. Would you like to continue that? Or do we want to keep it modern? Because we also find that along the line, a business that started in the 70s, 80s, we expect it in the year 2025 to still run a certain way. Is this part of the constitution that you speak of, interest and then also modernization of commercial enterprises?
Yeah, indeed. And actually, a good and a well-run family-owned business will discuss all those things.
Okay.
And we've seen for entities that basically have been able to get into the second or third generation, you find a lot of this. I mean, you listen to the video that we just played. We are looking at people who are now third generation running these enterprises. And you'll find for the families that have been very successful in ensuring that that transition happens, their children were involved in the business from a very young age. I've met clients who say they're third generation and they started coming into the family businesses when they were 12. When you're on holiday, you don't go to play outside with your friends and, just watching TV. You actually go to the family business and you're made to do little things. You're put at the reception, you're put, to go and arrange things at the back of the store. And that's how most of these businesses have created interest, even in the families, and the families have felt vested. But you can't keep your family out of the business for years and then expect that when they're, like 30 years in, that they'll develop an interest to be able to come and, play a big part in that family. So the family constitution or the family structure is what would help that family to define how they actually want to run that family who comes in. And in some instances, you find that you even have to define at what point your children come into the business. And I've seen, like, for instance, I'll give an example. A family-owned bank, as an example, can define in the constitution and say, for any of the second generation to come into the business, they need to have worked for 10 years in an independent bank before they come to take a senior role in the family-owned bank. So those structures are so important, and that's what will basically enable that enterprise to succeed.
We look at SMEs and how critical it is to the country's economy, and one would just critically pause, look at it, and hope that the government is seeing how important and critical this is to the economy, that there is need to partner with financial institutions, to just help in growing, advising all these SMEs. So in terms of working together and policies, and even you advising government on what needs to be done for these SMEs to continue growth, where are we playing at as a country and even as a bank in terms of just advising government on the bolts and nuts that needs to be tightened?
We've seen the government actually play a big role in enabling SMEs. I think, we have seen creation of even ministries that basically focus on SMEs, that focus on trade, and that creates at least a platform that enables the right policies to be put in place. Then, of course, there are associations as well that also partner with the private sector and government. You'll find you have Kenya Association of Manufacturers, Kenya National Chamber of Commerce. All these associations also help in terms of ensuring that the voice of the private sector or the SMEs is, being brought to the table when policies are being set apart. And as a bank, we play a big role as well in terms of partnering with the associations, partnering with government, and ensuring that the policies, the frameworks, aspects around, say, tax, as an example, are well factored in to enable these SMEs to succeed. So there's a lot more collaboration we've seen. And the SME sector, as an example, in Kenya is also, anchored on the Vision 2030. Yes. So it's quite critical to the government, and the government has done a lot to be able to enable the SMEs to succeed and to thrive.
Would you know what the SME saturation in the country is at the moment? Because we've come from the where you say, okay, well, I could be selling tomatoes.
Yes,
I'm in business, so I form part of that number. But what are we looking at? If you did out of 100% SMEs to those who are in formal employment, which outweighs the other?
Yeah. So in terms of registered entities, obviously SMEs are the majority. So we talk about, I think the data shows that there are 7 million businesses in Kenya, but about 1.5 are registered. So the one of selling tomatoes would fall in the category of unregistered SMEs. Then the ones that are registered are about 1.5 million. And this basically constitute about 80 to 90% of registered businesses in the economy. Now, if you go back again to the creation of employment, again, 90% of the jobs in Kenya today are, especially new jobs, are being offered by SMEs. So it's quite significant, and from a contribution to the GDP as well, it's anything between 40 to 60% of the country's GDP is basically driven by the SMEs. So it's quite material and important.
For any SME, but pretty much any business out here, one thing that is critical is how am I funding my business?
Yes.
How, even if it's from my pocket, if I want to scale higher, there is need for finding alternative means of funding business. And this would come into now financing, and with this, I need to partner with someone who believes in my dream, with someone who looks at me and says, and then you need to fix this for you to end up here. Someone who understands the mechanics that will make me thrive. And here enters a Stanbic. And I have consumed information from individuals. I've seen this guy who goes across different countries in the continent, just talking about what SMEs are doing in different countries in the continent. And this speaks to a bank that understands the power of SMEs. So today, Aseto, I want to come in, scale my business to grow further. Which are some of the things that you look into to ensure that even as you're partnering with me as my financier, that I am as well putting in the work to ensure that we both succeed?
Great. So it's a straightforward question, but a difficult question at the same time. Because when you look at which SMEs will thrive, the question is, first and foremost, what is that SME doing, and why did they set up the SME? And the most critical is that when you set up a business, and here I'll talk about business, not necessarily SMEs. When you set up a business, you need to be solving a problem, or you need to be taking advantage of an opportunity that has presented itself in an economy. So if you're solving a problem, or if you've taken advantage of an opportunity, your business is likely to actually thrive and do well. So I'll give an example. If, say, for instance, we've seen in this country, we're talking about maybe a population of 57 million people, and majority of these are young people below the age of 20. That creates a huge opportunity for a business. So if you come to me and say, I'm actually looking to set up a school, I know for sure that school, there's huge potential for that school, because we are talking about 60% of our population are, people below the age of 20. Education is a basic need that all these children have to go through. So that business then has longevity. And when we are looking to finance businesses, we start from understanding the purpose of that organization and whether the business that they're investing in will actually last. So that when I give you a facility of, say, 5 years, I need to be sure that in 5 years your business will still be in existence. So that's basically the fundamental. Then, of course, there are other factors that come in. Who is running that enterprise? Have you brought in skilled people to actually run that enterprise? Do you have the right systems, the right policies to be able to establish that particular business? Do you have the right HR the policies of how you bring in employees? Are these people well contracted? How do you manage your finances? Do you have somebody who is keeping your books of records? So those become things that basically are a must that we must look at. So for SMEs, obviously, for us to be able to extend credit, the first thing we look at is the financials. We look at the financial performance, ensure that you have the ability to actually generate cash that will be able to service the debt. But that said, there are SMEs that are still at an infancy. And it's important for us as financial institutions to also support those institutions. And we do offer different solutions for those businesses that are still either startups or they're into the first or second year. And what then we do as a bank, we bring in partners who have a mechanism of being able to fund startups, as an example. So we work very closely with your venture capitalists. We work with private equity funds. We work with DFIs as well that also are willing to basically support SMEs that are at an infancy. So when you come to Stanbic, you're not necessarily coming to Stanbic for the Stanbic specifically to come from Stanbic, but we'll ensure that you get the right solution that addresses the need that you have. And we basically work very closely with partners. Obviously, being the largest bank on the continent, we do have very strong partnerships with other partners that come in to support enterprises that are at different levels of growth and development.
So at the very minimum,
yes,
what for somebody who's walking through the doors must we have? Because it's, just based on what you're saying, Wanja, it's not the tomato seller who's selling 20 kgs of tomatoes in a day, or if that's walking through the doors. So what at the very minimum do people need to have when they're saying, okay, let's have a conversation? Because we do know that the largest challenge or the largest obstacle towards successful business is funding. It's capital.
Yes, it's capital.
We know this. So at the very minimum, what must I have walking through the doors to say, okay, let's see if Stanbic wants to have a conversation with me today about, moving my business from this point to the next?
So I'd say as a minimum, what we need first is, I would say, records. Let me put it, records. Because sometimes when we say we want financial statements, we know that SMEs, more often than not, don't produce those financial statements. So we want to see what is your trading history. And that trading history can come in the form of either formally, prepared books that have been formally prepared in the form of financial statements, or even your own bank statements, or statements even, say, from your M-Pesa transactions. And based on that, we then are able to sort of see, what is your trading record, and based on your trading record and what then you want to basically finance, we then have a conversation. So the biggest asset we have as a bank is actually the relationship management team, and we call this the trusted advisors. So working with your advisor, they are able then to be able to get a lot more from you, to understand your business, to understand your business aspirations, to understand what you want to do with the money that you want to take from us. And then from there, they're able to give you the right advice. Because sometimes you find that a client will come to you and they think they actually need a loan, but probably it's not a loan they need. It's maybe something else that they need. So that engagement becomes so critical for that enterprise to be able then to see whether what you think you require is really what you need to be able to actually propel your business to the next level. In those conversations, we also look at, ensuring that we give you the right solution. Again, you'll find a customer will come and they want a loan, but maybe they're actually, say, supplying stationery, say, to a government entity. They probably don't need to actually come and take a loan from you. They probably need to come and give you the contract, that award that they were given. And on the back of that contract, we can actually be able to finance that particular order that they have without necessarily really having to come to take a loan. So it's so important that the client has that engagement, so that you make sure that the facility or the solution that you take is actually the right solution. Because sometimes you can go for very expensive financing structures that are not even necessary. And we see this all the time, where customers will even go and get loans from Shylocks. A Shylock, you just go in, put in maybe a logbook or something, and you come out with the money. But that financing is so expensive. It is not the right financing structure, but you could have come to the bank with an invoice and actually walked out with a facility because we can finance that invoice.
But is that guaranteed though? And I think it is because of the lack of surety about whether if I do walk in, that will I come out with my invoice having been financed.
Yes.
You see, because if you... Okay, so I guess the question then is around surety.
Yeah.
That what kind of surety then is available for folks who are coming in and we want to have a conversation? That because of the lack of that, that's what leads them to make a desperate decision later.
I'd say, actually what we're doing today is really what is required. Because a lot of the times is that the information is not readily available, is not well known. So even for us as banks, we need to do a lot to make customers aware of what they can get from banks. Because I must say, banks have come a long way, and they do have very compelling solutions. They have very competitively priced solutions. And yes, you can actually walk into the bank and walk out with financing by walking in with an invoice. But you find more often than not, customers don't know that. So the banks need to do a lot of advocacy for customers to be able to know what they can get from banks, because banks have basically evolved over the years and have basically come up with solutions that specifically target SMEs, which actually address the challenges that SMEs have. As I said, not all SMEs have financials. So banks have evolved, and we're saying now, you don't need to come with audited financial statements. I can look at your M-Pesa statements, and based on your M-Pesa statements, I can extend credit to you. So that may not be well known, and that's why we basically are doing something, a show like this, to be able to create that awareness so that customers then are well aware of what they can and what they cannot get from banks.
You've mentioned presence of working with partnerships, with partners who are able to push the agenda, as well as having relationship advisors. And it's something that is usually not spoken about a lot, but it's very critical in ensuring that, first of all, these entrepreneurs who's walked in gets the correct information, gets the best facility, and gets the best advice for them to be able to make decisions, even as an individual. And with that, now you look at the partners that you're working with. You might be working with trust funds. You're working with others who are able to hold the hands of these entrepreneurs for them to be able to succeed. Now you couple that together with your relationship advisors, who are then able to direct them to either it is your partners or direct them to now internally for them to get these facilities. How has that been a game changer for these enterprises to succeed? What have you seen? Which some of the success stories that you've seen, and perhaps something that needs to be pushed even more?
Yeah, I'll give you an example of one situation such as that. We know that during COVID, SMEs were hit quite hard, and most of these SMEs actually were unable to reopen because their businesses were impacted by the lockdowns and all that. As a bank, Stanbic, we partnered with partners who were able to provide capital that we could inject to these SMEs. So we extended catalytic funding to SMEs in partnership with some of the DFIs. These facilities were zero interest. They were basically, the tenure of the facilities was slightly longer, and we were able to inject capital to these SMEs that were impacted to enable them to get back their businesses back on track. And I'll give you, and going back to the question you asked earlier around partnerships with government, this initiative, we ran it in partnership with government. We were working with counties. Counties have records of all the registered businesses in the counties. And they were able to tell which businesses have not been paying the rates over a period of time. So if you're not paying rates or your levies, your market levies, it means your business shut down. So they gave us that list, and using the list of those businesses that were impacted, again, we were able to source capital to inject into these businesses, and a number of those businesses were able to pick up. So again, it's looking at where the problem is and looking for the right solution to address the problem. But I think for me, a classic example would be how we basically supported enterprises during COVID, post-COVID, to enable these businesses to get back on track by extending credit that was, zero interest, and a lot more flexible to enable these businesses to be able to get their business back on track.
Do you think there's enough to go around for folks who are thinking, okay, at this point, I think of other jurisdictions whereby the entrepreneurial spirit has been pushed from government. That for them to understand that, look, in order for us to have an economy that we can run, we need to push entrepreneurship, and that means we provide a conducive environment. You've talked about the fact that working with government to make some of these things happen. But is society entrepreneurial to the point whereby you say, okay, you know what, the thing is already there, all we have to do is foster it and then push it? Is there, as you think about that, is there then enough to go round for everybody who says, I want to get into this, I want to start it and see how I can push it? I mean, because think about it, the Googles, the Nikes of this world, those are entrepreneurs who started businesses and then pushed to the point whereby they command global attention because of the foundations that they started with. Do we have that?
I would say the entrepreneurial spirit in Kenya, I would say, exists. But obviously, there's still room for improvement, I would say. And here, I'll just basically give you my own personal observation. When you look at entrepreneurs, as I said, it's either you're solving a problem or you're taking advantage of an opportunity. But there's an entrepreneurial spirit, and I'll put it in quotes, that exists in Kenya. Just because your next door neighbor has set up a shop that is selling tomatoes, you also feel that you need to set one up. And before you know it, in 3 months, there are 20 shops that are doing the same thing. So I wouldn't call that entrepreneurship. So you need to basically know what problem are you solving, or what opportunity are you taking advantage of, and who are you basically serving, and not just setting up a business. And you find there's a lot of that, and that's why you probably will find that indigenous businesses in Kenya, very few of them are going beyond first generation. Then the other entrepreneurial spirit that we find in the country is, again, one of where we're not building enterprises. It's one where we are cutting deals. And I think for me, that's something that, again, isn't sustainable. So I have a tender here. We call them tenderpreneurs. I don't know whether that tenderpreneurship is entrepreneurship. So again, if you want to set up an enterprise, it has to be founded on purpose. Exactly why do you think it's important, to actually set up this enterprise? And if you do that, then likely that business will basically transcend to the next generation and will actually go over many hurdles that we find. And when you observe and look at some of the businesses that have done well, whether it's family-owned businesses or enterprises that have been set and founded that focus on purpose have a much bigger chance of actually doing well. Because for them, it's not about profit. They're not looking for profit. Because I always say, if you make the profit or you make a big deal and you make the money, it's easy to shut down that business and say, you know what, I'm done. But if your business is not about profit only, then you find that you would be compelled to continuously look at innovating, looking at trends to make sure that business is able to go through certain challenges that may be that the businesses could potentially be facing. So it's that piece for me that I would say isn't there enough in the country, but the entrepreneurship spirit is there. The question you asked around, is there enough to go around? I would say there's still room for more, but we find that there are very many partners out there that are looking at Sub-Saharan Africa as an opportunity to come and support these enterprises. But again, we need to be able to be looking at building strong enterprises for these people to feel compelled to come in and, work with the financial institutions, with the governments, and to support these enterprises to continue to grow.
What are some of the emerging opportunities for enterprises that they can tap into for growth?
I would say, I think I gave an example of one as an example. The young population that we see in Kenya or on the continent, where you're saying 60% of the population is people below the age of 20. So that creates opportunities for education, opportunities for, anyone who is in agro-processing. All these people have to feed. All these children have to eat. So that's a big opportunity for enterprises. Anyone who is looking to set up an enterprise, to see how you tap into that young population. The second one as well, we find Kenya, based on where Kenya is located, we are basically, have access to the port. Yeah. We are the gateway to East Africa and the wider Eastern Africa, including actually Central Africa. So again, that creates huge opportunity for businesses that are in logistics, warehousing, transport. So again, you can take advantage of the geographical location of Kenya to take advantage of those opportunities that emerge. We've seen huge opportunities as well around infrastructure. We're building roads, we are building railways, we are building ports, we are building seaports, airports. Again, if you're an entrepreneur, say in construction, that creates huge opportunity as well for you, because a lot of these contractors who are coming in to put the large infrastructure also require subcontractors. So there's a lot of opportunities that we see. Again, the country is also looking at becoming more industrialized. We talk about being largely being agricultural, but focusing on primary agriculture. There's huge opportunity to actually do value addition and get into, processing a lot of, the agricultural produce that we see. I sometimes get surprised at, you buy like canned food from the supermarket and you see the food is from Singapore. And you're asking, these are peas. Why are we getting canned peas from Singapore? Yet there are peas that are being grown in Nyandarua, and those peas more often than not actually don't even get to the markets because they get spoiled, because we don't even have storage facilities. So it's those sort of things that we need to sort of get more and more entrepreneurs looking at those opportunities and actually seeing how we can actually take advantage of what we have as a country. Tea, we produce tea. That tea goes, to be processed out. Coffee, then it comes back and we buy it at 10 times the price. So again, how do we get more and more people looking at actually adding value to the agricultural produce that we produce in this country that then gets exported and then comes back processed?
How do we get more people to pay attention to that? I heard a fantastic story of a young woman who, in Baringo County, because during mango season, as mangoes are coming out of Baringo as well, and she doesn't even focus on the fruit. She focuses on the ones that fall. She focuses on the overripe, the ones that are discarded essentially. And she takes those and she does pulp and she does dried fruit with, which she then exports from the waste, supposed waste. But she's been supported, interestingly enough, she's been supported, by an external party. So I think about that, and I think about Stanbic and just the conversations that you're having now, and that how do we then get more people? You just talked about peas, and I think it's a phenomenal story, because how many of the canned foods on our shelves are actually Kenyan product, but the product is available in Kenya.
Exactly, yeah.
So to make that connection seems like Stanbic would be a fantastic connector of these realities. That how would Stanbic then connect the opportunity with the individual or the business and say, guys, look, this is so Stanbic can give the money for sure, but is Stanbic also a connector to the opportunities that lie available, like the ones you've just said? Because it just blows my mind that there are peas all over the place. And we go to markets and we see them even being thrown away. They become waste that animals eat. But we're importing them and putting them on the shelves. I mean, it's ridiculous almost. So I mean, how do you connect those opportunities with the realities?
So I'd say as Stanbic, we go beyond financing, and we actually look at how we connect customers to the opportunity. We do a lot of those engagements. We also create opportunities as well for market access. Because sometimes why people will not go the extra mile is a question of where am I selling this produce? After I do this, then where does it go? So we go beyond just providing the financing. I'll give an example. We've worked very closely with us. We do have a Standard Foundation, and the Standard Foundation does exactly what you described, where we look at some of these enterprises. Because again, going back to where some of these ventures would be at, some of them are basically startups. So we actually provide them with funding that enables them to actually do that value addition. We've done that. We've supported people again, in doing mangoes. Some client that we got in Kibwezi, we've had customers. We've given funding where they do tomatoes, convert that into a pulp and make tomato sauce or tomato paste. And a lot of this also means there's a bit of skilling that we also offer, because you may see the opportunity, but you may not have the knowledge. And we work again with partners to actually be able to educate and give these people the skills to be able to acquire the skills. Because sometimes you also need that skill to be able to get into manufacturing. It's not always that because you are selling tomatoes, you can turn around and be a successful manufacturer.
Right.
So we work again with our clients to enable them to, give them that capacity to be able to know what skills they need to have to be able to get into processing, as an example. And again, from there, we also create for them opportunities as well to be able to sell that produce. There's a lot to be done. And I think many more partners, including government, is playing that role as well of just enabling industries and more so enabling, guys to get into value addition. And it's a core pillar as well that the government is looking to drive as well.
You earlier mentioned in terms of need for advocacy, to know what banks have to offer, because here now we were just learning more in terms of it's not just about coming in to give you access to financing, but it's a question of going even further and helping you get opening markets for you, letting us know after this is where you head to, also just in terms of tapping into manufacturing. It is in this country where when it rains a lot, you find we have so much milk and it is poured on the streets, And here we have now a bank that is going to the people, having discussions to see how we can tap onto these opportunities that do exist. Because you look at the government and what it's pushing is we need to get to developed status, but while at that, manufacturing then becomes part of that process, So in terms of just, you've gone to different places, what has been the response from those that you're targeting, from entrepreneurs that do exist out there who need this information, have never known that this information exists, but now do have it?
We actually, you'd be amazed at how much people are thirsty for knowledge, and where we've been able to engage these sort of enterprises. And as I said, we work very closely with partners, including the counties, because, as I said, the area, how you get to know where the enterprises are, you need to tap into the government agencies. And we've had forums where we bring in the businesses in certain areas, like Nakuru County, bring in all the businesses that are maybe focusing on a certain segment, say agriculture, and you engage them and give them a bit of just capacity building on how to run an enterprise, how to manage finances, how to do value addition, how you can add value to your business and actually increase your profitability by doing more. And that bit ends up being so important. And it's something that I would say isn't being done enough. So a lot of these enterprises, you find that when you offer them the knowledge, then the question then after that is, after you've offered them the knowledge, then how do you come in to enable them? So as we said, how do you provide the right financing structure for them? How do you enable them to be able to actually scale without necessarily having to invest in some of those structures. And I'll go back again to the case of dairy. Dairy, you find that in some instances, will probably not work with the farmers, individual farmers. Will work with a cooperative. And will finance that cooperative to and give them a facility to be able to put a cooling plant. That cooling plant becomes a big enabler to the farmers in that region, because now these farmers can produce the milk, bring it to the buying center, but there's an infrastructure that is so critical to ensure that milk doesn't spoil. And the outcome of that is that then they're able to get full value for the milk that they produce, because that milk will not get spoiled. So the instances where you need to bring in collective solutions to be able to solve for maybe a certain region or a certain subsector. Potatoes, as an example, we have had situations where we are looking at how do we fund storage facilities, because again, potatoes spoil very, very quickly. But if you fund that infrastructure, either to maybe you finance a cooperative or a working group that basically is in that region, again, you're able to create value for the farmers in that particular region. So I would say there isn't as one solution that fits all businesses. You'd have to look at different businesses, different segments, different sectors, different regions, understand the pain points that are in that area, and then provide the right solutions. And that's what as Stanbic we do. So if you come and ask me, do you have a solution for entrepreneurs? I'll tell you no. I'll tell you no, because I need to be able to see what's the pain point, what's the problem at that place, and then how do I solve that problem. And it means coming up with bespoke solutions for different customers, and not necessarily one solution that fits all. Yeah,
that's interesting, because then we can be looking essentially, Wanja, at solutions. So you say, in fact, what we do have is that you can connect funds to problems.
Yes.
And essentially you're providing solutions for society through the assistance that you're giving as Stanbic.
Yes, precisely.
What do you see, I mean, really quickly, as we wrap this up, as the future of enterprises and entrepreneurship in Kenya? What do you see? You know how folks can forecast and say, well, the future looks bright or bleak. What does it look like?
I think the future has to be bright. I don't think we have a choice. We don't have a choice because as I said, these enterprises are the ones that are driving the backbone of the economy. And if we don't drive the establishment of these enterprises, then it means unemployment. It means lack of opportunities for young people. And it means we'll probably not get your basic foods or supplies.
Right.
So we have no choice but to actually look at the challenges that these enterprises are facing and see how we partner to actually help them to actually thrive. So, and also, I think the other thing also that I'd almost want to also highlight is that we're also seeing a lot of this young population that we have. More often than not, they're actually not also looking to go into formal employment. Again, the gig economy is a big opportunity, and I don't know whether many of us are focusing a lot on how we support these young entrepreneurs and the businesses that are now emerging. Most of these businesses are emerging, they are digital businesses. They are more focusing on tech and solutions around technology. Again, that wave is, I mean, it's here with us. We need to find a way of actually supporting that. So the future of enterprises in Kenya is bright.
Has to be bright.
It has to be bright, and we have to actually see how we make it work. And I think the other thing also that we're saying is that we don't want us only to just build small enterprises. The idea is actually to get these enterprises to actually become larger enterprises. As I said, a lot of the family-owned businesses that we find operating in country are large enterprises. So we need to actually see how these enterprises transition from small enterprises into large enterprises that are actually providing solutions, not just in Kenya, but across the border. We are seeing opportunities as well emerging, like with the tariffs that we've seen, the US tariffs. as an example, it creates huge opportunity for a country like us, because we can actually start building enterprises and manufacturing entities to even supply into economies like the US.
Indeed.
So those businesses that will do that are the SMEs of today. So the question is, what is the private sector doing? What is the government doing? What are we doing as banks to actually support these enterprises so that they can become large enterprises that will basically go beyond the borders of this country? We know that the large family-owned businesses that, I mean, you find your Mars, your BMW, these are family-owned businesses.
Yes.
Why can't we have enough of those coming from Kenya and actually providing solutions across the continent?
Global solutions, for sure. Well, I mean, and it's conversations like this that start to spur the thinking in minds of many as we do. So we want to thank you very much for being here with us this morning and sharing a lot of these insights necessary for us to have those. Florence Wanja is the head East Africa Business and Commercial Banking with Stanbic. Thank you for being here with us this morning and for starting off the Situation Room in the month of December with us. More conversations continue.
This is the Situation Room, the only way to start your day.